Guys, this is Harry. Uh, Today I'm sharing a portfolio uh, which is consist of mainly ETFs, which I personally think are gonna be the best bet going into 2021. I have spent a lot of time doing research. First of all, I'm not a financial advisor, so please please make sure you do your own research. Do not go by anyone's word. Listen to everybody, but at the end, make a decision which you think is best for you. Uh, Today, what I'm sharing on the screen is what I think are the best picks for next year. Now it's December, so going into 2021, I think these picks will outperform other ETFs in the market. So, first of all, I'm not promoting for anybody. This is my personal interest, and I'm not an investment advisor. So, but I have a lot of experience. I've been trading from last 10 years. I've seen it all, ups and downs in life. But now I think I've developed a lot of experience and I've spent a lot of time in developing this comprehensive list, which I think will be a game changer next year. I can make another video after after a few months and show you what how these ETFs perform from now versus at that time later on. But okay, so before I go into a lot of details, let's just quickly see what I have here. So for your knowledge, basically, I compile the list, and these are some of the best stocks. Now there are a lot of ETFs in market which are very similar, but in my opinion, this is with this portfolio, you can never be on the negative side. This portfolio is going to be a game changer. So I'll go over details of my stocks. So basically, I'll go with the first stock, which I think is RBC. These are basically Canadian stocks. I'm in Canada, so I don't. I prefer to invest in Canadian dollars, so I use all the Toronto symbols. There are a lot of similar ETFs in US symbol, but instead of going through exchange fee, I prefer to trade in Canadian. Okay, so let's go one by one. Royal Bank. Okay, so look at this stock. Uh, Look at the history. Look at the market capital, 150 billion, and look at the price from last 5 years to maximum. So there are many stocks of banks. There is Royal Bank, there is CIBC, there is National Bank, there's TD, um, and I think Scotia Bank. So you can choose any of these, but Royal Bank is probably the biggest Canadian bank with a market capital of 150 billion. So, and it also has a very healthy volume for 4 million shares traded. I think around 2 million shares traded daily. And also it has a very solid dividend yield. Every quarter they give, I think over a dollar. I think the latest one was $1.08 per share. I got this in my portfolio a month ago. I got it at a pretty good price. I think I'm not going to talk about price, but I think a month ago you can see a spread, and it's been going up since then. And I think in future this is easily going to hit. Uh, I think they have a price target of 110, but I think it's going to go way over that, probably around 130, 140. I think it can easily go there. So this is one of my best picks. You should have, it's very costly, but you don't have to buy, you buy whatever you can afford. But I would say at least uh, 10% of your stock, 5 to 10% you should invest in RBC Royal Bank. Okay, now going back to the next stock, which is probably one of the best stocks I've ever picked. This is this stock is called ZQQ.to. This one replicates Nasdaq 100 fund. They are very similar stocks. If you compare the product, they are very similar stocks to this one. There is HXQ, there is um, TEC, there is XQQ, there is QQC.F. All of them do the same thing. Uh, they're all competitors of each other, but there are few reasons I picked this one over other. There's a very healthy volume on this stock, around 160,000 shares traded every day. It has a pretty good yield, 0.41%. And whoever is listening now, if they want to jump on and buy this, I think the next dividends, there's an ex-dividend date, December 2021, sorry, December 2020. So you might be just in time to get dividends for this stock. So get it sooner than later. Also, there's another good stock which is very similar. It's uh, QQC.F. That's another one which I like, but that's over $100, and I think this one is still a bit below. All of the stocks which I mentioned before, which are similar to this, they're competitor of each other. They all have advantages and disadvantages. This one is hedged to Canadian index, so it's basically you will see as currency changes, this might go up and down. There's also a cost of hedging for converting American stocks to Canadian. So you have to also take that into account. Uh, if I if I didn't pick this one, I would have picked TEC. These are the two stocks which are my favorite. Quickly look into the holdings of this stock. You can see basically all the all the major players are here. All the technology sectors are here. So I would say portfolio wise, this is going to be probably, I would say if you're looking for equity profile, I would go with at least 20% of my portfolio invested in this stock, that QQ.T. Okay, my third best pick. Uh, okay, by the way, these are not arranged in best or worst. This is basically a portfolio which I think all of these stocks are pretty good. So let's quickly review. So this is called Emerging Market All Capital Index. Basically, uh, this will give you a broader diversification. Also look at the net assets, 1.1 billion, very good. Volume is pretty good. Yield is not bad, and also look at the holdings. Uh, this one is basically tracking VWO, which is an American index, which is basically the holdings of that is you can see emerging markets, right? Alibaba, very well-known stock, um, and few other Chinese and Asian stocks, basically, which are doing pretty good, very, very good. So, uh, yeah, so I would say 5 to 10% of BEE, Canadian. That's why I got TO. XEF, okay, more diversification. Basically, this will also give you a broader exposure. This is probably a balanced portfolio, basically 3.54 billion. Yield is not bad. If you look at the holdings, uh, it's all over the place, right? Toyota, Nestle. Um, it's also replicating this another ETF, and you can see all the holdings here. This will give you a broader diversification. This stock is doing pretty good. It's not an equity stock. It's not going to go up and down as market changes. But if you look at from last uh, March and April, when due to coronavirus the stock dipped. But overall, if you look at the whole maximum time the stock is in the market, you can see it's going upwards. And I think it with market changes, this doesn't change so much. So I think it's a pretty good stock to own. So I would say around maybe 5% of this stock is a good fit. Okay, other one is we grow, which is another 5% in my portfolio I would keep. This is a Vanguard growth ETF portfolio. One thing to note, Vanguard have few other portfolios. Basically, there is a balanced portfolio which is VBAL. There's equity portfolio, VEQT. There's conservative portfolio. which is CVCNS. All of them are good. Um, this one I picked out of all mainly because this one has a slight less risk compared to equity, and also it has uh, 1.5 billion net assets with healthy volume compared to other portfolios. This is the biggest portfolio Vanguard has. Also, this is also good for someone who don't want to micromanage stocks, who don't have time, who don't have a lot of investment knowledge. They can probably, and who still want growth, um, uh, but not as aggressive growth, with some with a slight less risk. They can invest in this. They can probably put all their money in this and then just forget it, and then see how this one behaves. You can see maximum overall there is a growth, so it's not bad as well. This is pretty new. It started in 2018, but overall for someone who doesn't want to micromanage every day, this is a good stock. Also, very quickly look at the holdings. It's a balance between basically equity stocks, US stock with equity, uh, uh, a lot of Canadian stocks. There's bond as well because of bond, it's slightly less risky. You can see a lot of bond elements with less percentage. There's also emerging market, which I talked about, also an equity portfolio. So usually, I think it's overall it consists of maybe like 80% equity, 20% bond. So basically, a pretty pretty good stock to own. Next one is XIU. Um, so basically, let it open. So this is also look at the this is applicating S&P and TSX index. It's one of the good stocks which I own. Look at the net assets, 8.77 billion, very healthy volume. Um, look at the look at the look at the growth since 99. It's been growing crazy. Uh, year to date yield is not bad, almost 3.5%, but overall it's growing. If you look at the holdings, also it has most of the Canadian holdings, some of the banks, and some of the online. So Shopify increased so much this year due to online shopping. So, and also it has some energy stocks, some bank stocks, some gold stocks. So very diversified. Canadian Pacific Rail, very diversified portfolio, and very healthy portfolio. I think this is also another stock to keep in your portfolio, maybe around 5%. Uh, this one is also good. Um, just to say, there's another competitor called XIC. Both are good, XIC or XIU. Doesn't really matter. Both of them are in similar price range. So whatever you feel good, just buy it. The XIU has better market capitals, so I chose XIU compared to XIC. Okay, now this is an interesting one. I chose some of the bank stocks, which I'll talk about. ZWK, which not a lot of people might know in the ETF world. This one is called BMO Covered Call US Bank, ZWK. So basically, this is, if you look at the holding, all major US banks are here. You can see American Financial, Bank of America, Citigroup, very well rated. All the banks are here. Basically, one of the reasons why I bought this, because I expect uh, American economy to recover. And if you look at from last 1 year, it's been tanking, but I expect there's going to be a lot of growth in American bank sector, and this is going to probably double in near term, probably before next year ends. So there's a lot of potential. One of the other reasons is very healthy yield. It gives you 18 cents per stock you own. That's like one of the best dividends stocks in the market right now. If you look every month, they're giving 18 cents dividend. That's awesome, guys. This is like unbelievable. So yeah, this this stock is mainly for getting monthly dividends with a lot of potential of good upside. So probably another 5% on this I would put in my portfolio. Another one is a Canadian bank. It's called uh, ZWB, It's mainly by BMO. Also very good net assets, 1.61 billion. Good healthy volume. Look at the yield, guys. There's a competitor. Basically, it's under its holding. There's another bank called ZEB. Uh, so ZEB is basically it's more of a growth stock, which is comprised of basically these these five or six banks. ZEB has, if you look into later on, you can check, you can do your own research. So either ZEB or ZWB, both are good picks. The reason I got ZWB is because of dividends. It has a very good monthly dividend yield. You get healthy dividend every month, almost 6.5%. While ZEB is a growth stock, so basically the growth of that stock will be better than ZWB. If you look at the, you can compare, but mainly the growth is on this stock is less because they're giving you monthly dividends, and ZEB basically you will get more growth and less dividends. So guys, this is also a good stock to have. Next one is XRE. There are also a few competitors. This is real estate. It's better, like I said, it's better to have diversification in your portfolio. So basically, this is almost a billion assets here, and also very good monthly yield. Every month they're giving you dividends as well. So also, if you look at the charts history, overall, if you look at since its inception, it's going up. Due to Corona, it went down, but I think there's a lot of potential in real estate sector. Once Corona goes down, this is going to go up significantly, probably going to double, I think. Uh, there's a lot of growth as well as very good monthly dividends. So this is also a good stock to own. Also, there's another competitor for this stock called VRE. So you can buy any of this XRE or VRE. The reason I got XRE is because it's like almost half the price of VRE with almost same yield rate. Okay, and this one is interesting. Harvest Tech Achievers Growth stock. This is basically another equity stock, and it's from by Harvest. Reason I like it is it's probably I've done a lot of research, guys, and I think this is the best equity stock that comprises of technological companies who gives monthly dividends. I haven't seen any stock which gives such a healthy monthly dividend with, look at the performance of this stock, right, guys? 23%, 23% so far this year with 6% dividends. Every month you're getting dividends. And look at the holdings. The reason I like this stock is I'm a big fan of Google, guys. All other equity like ZQQ or XQQ or they don't, the major player major weight they have is on Apple, but this one has major weight on Google. And I love Google, and I've been like Google has been growing crazy since inception. But also it has all the other equal weighted stocks. I think it has 20 equal weighted technological stocks. So a lot of growth potential. The reason I particularly like this is because of dividend yield, and it's been doing good so far. So this is one of the winners. So I would put around 10 to 20% in this stock in my portfolio. This is one of the major winners. So don't miss this one. Uh, Another few XDR, diversified monthly income. This is also good for having monthly incomes, and it's very diversified, and it's also pretty good, significant. Well, average volume and half a million um, market capital. That's good. If you look at the holdings, um, it's all over, right? Canadian Housing, AT&T, Exxon Mobil, RBC, CM. So it's all over. Like it's a very diversified portfolio, and it gives you very low risk. And if you look at the stock from from last year, it's been steadily going up, and I think it's gonna be. If you look at the whole maximum since inception, it's not doing that great, but I think there's a lot of potential on this stock. And guys, one of the things is you have to take some risk too, right? Um, and I think this is one of the stocks which is gonna do good in future. Okay, another one. Now we're gonna talk about some bonds. we should not go all aggressive on all equity. We should have a certain percentage in bonds. There are a lot of good bonds stock. There's ZAG, there's I think there's XAG if I'm not wrong. There's some good bond stocks, but the reason I like this one is because of yield, almost 6.5%, more than 6.5 every month, almost 6 cents per stock you get. And look at the performance, guys. It's pretty stable, right? Um, if you look at last year, it's almost there, right? With monthly dividends, it's almost there. Uh, but this is a very safe stock. It does not change too much with market fluctuations, and it's been giving a constant yield. I haven't personally find any stock which gives you such a big, not any stock, any bond stocks which give you such a consistent yield. So I would keep this as around 5 to 10% in my portfolio as well. HYI.TO. HHL. Okay, now basically this is basically in healthcare sector. This is another great harvest product I recommend, and this one has almost 10% yield. That's crazy, guys. That's crazy. Look at the price of this stock and look at the yield. So this is basically, if you look at the performance and holdings, this is consists of all the basically medical companies here. Pfizer is here, which is gonna go great. By the way, guys, Pfizer I recommend if you can afford, not afford, if you can, if you trade in US dollar, I think Pfizer is going to be the best stock for the next year. Uh, I won't say best, but probably one of the best stocks. There's a lot of potential in that. So see if you can buy Pfizer. But anyhow, overall, very good performance. If you look at the dividends, every month it's giving healthy dividends. That's almost 6 cents per stock. 10%, guys, 10% dividend yield, unbelievable. Look at the history, guys. Almost there. It's almost recovered from the tank this year, and it's gonna be great. I think it's gonna be great stock. So healthcare is gonna be up next year. This is probably one of the other good stocks. Probably 5% in your portfolio. And the last one is FIE. This is one of my favorites, mainly because of the yield it gives, almost 8% yield, 4 cents per stock. And look at the graph, guys. Since inception, ups and downs, but very consistent, very consistent. This is the stock which, if you have 50,000, 100,000 in your portfolio and you don't want a lot of risk, just put all the money in the stock and relax and enjoy monthly dividends, guys. This is like 8% yield. Even if the stock is staying flat, you will get 8% yield just for dividends. This is unbelievable stock. Also look at the holdings. All the banks are here. Look, all the banks are here. um, Also some of the bonds, but this is probably the best stock. um, So yeah, this is also, I will keep maybe more than 10% if I can in this stock as well. So guys, this is the portfolio which I think is gonna win next year, 2021. Just sit and wait and watch what happens. Like I said, look, this my portfolio consists of major banks, health sector, bonds, equity, real estate, and an emerging market all over world. uh, and also uh, there's also this dividend stock which is also X, XTR, XTR, which is very diversified. So this is gonna be a major winner, guys. I like I said, this is my best picks. Like I said, do your own research. I'm not marketing for anybody. I spent a lot of time researching, and eventually this is the list I came up with, and I think these are gonna be the major winner. Guys, if you have any suggestions or if you want any opinions on any stocks, I can answer best of my abilities. If you like my video, please press like, and all the best, guys. This is just, I just want to share. Uh, I want everybody to make more money, invest. Guys, the biggest risk is not to invest. Like, you should try to invest, and with this portfolio, there's always going to be a win. Okay, guys, all the best and be safe. Happy New Year, and we'll see you in 2021. All the best.